Traders, Greg here with market update. Okay, so this week in markets it has started off a little bit quiet, but look, we have had a meaningful move, and that has been in Bitcoin. Look, Bitcoin has been the weak link in markets. This is something that we have mentioned on numerous market updates. Look, end of last year. Bitcoin actually closed negative for the year when we had Nasdaq, up 20%. So that correlation, with risk assets, was breaking down, months ago, end of last year. And look, it has been basically trending lower pretty much all year so far, and we have printed a low of 60,000 so far. This week, we started around 68,000, and we did get a very good sell-off down to print lows of 62,000 yesterday. So retesting that 60,000 low. Now that 60,000 low is a huge level. I'd imagine that there is lots of liquidation sitting below 60,000. So if we do at some stage, and it looks like it's probably just a matter of time before that happens, break 60,000, then we could see Bitcoin sharply lower and some rivers of blood on the back of this, liquidation and forced selling. So at the moment, we're opening Asia with a little bit of a bounce from the lows is around 62,000 back to around 64,000. But look, sellers and the bears are firmly in control, and they have been for some time. So look, bias is obviously to stay short or join the bears on any sort of retracements. Now today we do get some important economic data here locally in Australia. We do get the monthly CPI data. That is super important. Recently, we did have the Reserve Bank, the only central bank globally, that's raising rates and raised rates because inflation spiked. Last numbers we got, headline inflation went from 3.4 up to 3.8, pushing back up towards 4%. Not good. Anyway, today's number for the headline, year on year, market is expecting marginally lower. So going from 3.8% last month down to 3.7%, so just marginally lower. The trimmed mean year on year, and this is something that certainly the RBA focuses on a lot, is supposed to stay stable around 3.3% where it was last month. So look, the last thing that the RBA needs is obviously for these numbers to come out above expectations. So if we do get another surprise and we don't get it marginally lower, it stays at 3.8 or goes higher. And then also, obviously, if that trim mean, especially month on month, market expecting 0.2%. The market's been talking about if it comes out anywhere plus 0.4, that is going to keep the market on edge, that the RBA potentially still have that tightening bias. So last employment numbers we got in Australia was solid. Recently the unemployment rate's at 4.1%. So RBA certainly, if inflation continues to be a problem, they've got the green light obviously to continue potentially hiking. Anyway, for the Aussie, at the moment with the RBA hiking again to cash rate of 3.85%. We've got the Fed funds at 3.5. So there's a 35 basis point positive differential in favour of the RBA. That's something that we haven't had, pretty much since COVID, because Fed fund rates have been over where the RBA is, and that's been a tailwind for the Aussie. It's been one of the reasons why Aussie has been up towards 2-year highs around that 71-cent level. So certainly, we get positive prints. That's going to continue to be a tailwind for the Aussie, and especially when markets are trading risk on. Aussie is probably one of your go-to longs in the currency space that will continue to work, and especially with the market still has an easing bias for the Fed. June they're looking at potentially a coin flip, maybe that the Fed cuts again. So over time, there is expectation that interest rate differential in favour of the RBA will continue to blowout in the RBA's favour, and again continue to be a tailwind for the Aussie. ASX has been flying very high; it's up near record highs. I would imagine if to get this thing lower, if we did have a print that came out above expectations, that potentially could do it. But yes, ASX is certainly been doing exceptionally well. Post the RBA, we do have the presidents in the US State of the Union address, which happens once a year. Super important. So it's basically when Trump will be basically giving a rundown of how the economy is going, talk about his policies and anything else that is important happening in the US. So the whole country and obviously Congress, but more importantly also the market will be watching. A couple of things that the market is going to be focused on. One is obviously tariffs. Tariffs have been back in the news, obviously, with the Supreme Court basically making that his initial tariffs illegal. No doubt market's going to be interested in hear exactly what Trump's thoughts are moving forward on tariffs. But one thing for sure, look, this is one of his big policies. He is not giving up on this. He is going to stand firm. I would imagine that's the sort of rhetoric we're going to hear today. Look, the tariff uncertainty, tariffs in general, obviously are a bit of a negative. So potentially that could be a bit of a negative during his State of the Union address. But probably the biggest focus for the market, 100%, is going to be on any of his thoughts or comments on the US-Iran situation. We've got his comments from end of last week, where he basically said he's going to make a decision on what happens with Iran in the next 10 days. That pretty much runs out at the end of this week. So now we're sort of at a crucial time where we're going to find out whether or not US and Iran go to war, which obviously is going to have huge market impacts, massive. So yes, any of his comments today, and we did get a headline at the end of the close of markets in the US overnight that Iran still has not come up with a deal yet, and that's something that obviously everyone's waiting on. The last-ditch diplomacy comes tomorrow. There's apparently still supposed to be talks in Geneva between US and Iran. And I would imagine that if we do not get positive headlines post that meeting or today at the State of the Union address, market is going to start preparing war trades and the fact that it's probably a given that it's going to happen. Generally, it happens on weekends when markets close, so potentially after Friday market close in the US. But yes, watch obviously the key markets there. Crude oil, that's just been very bid at the moment. It's still up around it's trading around $66. Highest has been around 67, which is the highest it's been since August of last year. Crude can gap $10, $15, $20 higher if the bombs start flying. It could be well above $80. So that is probably the number one market to watch for how market is pricing or expectations of what's going to happen with US and Iran. Obviously gold as well. Gold can do hundreds of dollars in hours. So that's obviously another go-to market. Obviously equities as well, which really have done not a hell of a lot for the last couple of months. They've just been a bit of a range trade. S&P, 68 even up to 7,000. Waiting for some sort of impetus to either break top side or break the bottom side. So I think as far as equities are concerned, we're probably going to find out that range break soon as well. But yes, we're coming into a very crucial time now, whether or not we find out exactly what's going to happen with US and Iran. But a lot of the market is thinking that it is a done deal. The US has moved so much military hardware, and generally when they've moved this much military hardware, they've always gone to war. Anyway, let's see. Finally, tonight, after market closes in the US, we get Nvidia earnings, fourth quarter earnings results. This is obviously important. The simple fact is that Nvidia is the general, it's the market darling, it's the reason why it's the AI trade, it's what got NASDAQ and S&P up to record highs and then floated all global equity indexes as well. So no doubt, in the past, Nvidia earnings have always beat, Nvidia's always gone up, but at some stage maybe that stops. If for some reason market doesn't like what they see from the Nvidia earnings, and Nvidia goes lower, and the option market implied volatilities looking for a move of about 5% on Nvidia plus or minus on the back of the earnings, and for a company that's got a market cap of around $5 trillion. That can move indexes easily. So yes, something for traders to watch out for, and just risk in general as well. Super important, Nvidia earnings. Anyway, look, we've got a lot coming up now. Between now and the end of the week, so I'd imagine volatility is about to start. So good luck, and we'll check back in with you shortly.